appetite. A session which is investments, discussing innovative models like blended finance, credit guarantee, and concessional capital to scale up the climate finance. Sanjeev Kaushik, Principal Financial Sector Specialist of ADB, is joining us online. Then Laurent Gonnet, Lead Financial Sector Specialist, World Bank. Shalabh Tandon had to leave because he fell a bit unwell. We are still trying if he is recovering or he is feeling slightly better, if he can join us online. And Shri R.K. Singh, CGM, Head of Green Financing, SIDBI. And moderator of the session is Kuljit Singh Popliji. He is former chairman of IREDA. शलभ नहीं है, शलभ नहीं है, शलभ नहीं, एक बंदा नहीं है, तो लॉरेंस को उधर कर दो और शलभ को हटाओ। रुक जाओ रुक जाओ रुक जाओ रुक जाओ रुक जाओ। संजीव कौशल नहीं आए ना ऑनलाइन? हाँ हाँ हाँ, तो शलभ भी नहीं है, तो शलभ भी हाँ। Laurent. So, Popliji, mic and floor is yours.
Good afternoon, everyone. Again, the session is on how do you scale up green financing, and number two, how do you de-risk it through innovative models and scale up financing. So let me tell you, globally today, the total investment has gone up to $2.1 trillion in climate finance. If you look back, in 2004, it was around $30 billion. 2010, it reached $150 billion. And we used to talk about that, can we make it $1 trillion for solar? Of course, the climate finance is important. So today it is $2.1 trillion. And it is expected that this will go up to $4 trillion by 2030, 31, 32. If you look at India, in last 15 years, we always wondered whether we will have enough financing. Will we find way to finance solar projects which were expensive? But what we had seen is we had been able to scale it up. And we expect that by 2030, 32, our investment will go up to $60 to $70 billion. But what is important in all this is that this whole financing of a total investment of $2.1 trillion, the major investment has happened in China, $800 billion. If you take US, European Union and UK together, it is still less than China. So the rest of the world has contributed to $500 billion. And that is also some of the emerging countries. And if you again look at Africa or other countries, there the investment has not happened. So the challenge is also that the investment, because we are talking about climate goals, we are talking about net zero. And if it happens in one country and rest of the globe is not getting green, it doesn't help. So we have to, all these models will help developing economies, underdeveloped economies also to raise capital, scale up financing. With these words, I have a wonderful panel. We have Mr. R.K. Singh ji. He has more than 30 years of experience. He's working with SIDBI. SIDBI is into small and medium financing, and they have 7-8 verticals wherein green financing is one. They are financing electric vehicles. They are financing solar projects, wind projects at a smaller level, and they are doing a great job. Then we have Mr. Gonnet from World Bank. All we know is World Bank is a multilateral development institution. We have taken lines of credit from them, and they are helping out in greening. We have Mr. Kaushik, the most experienced one. He was Additional Secretary Finance, and before joining ADB, he has been one of the best 10 IAS officers in finance. So huge round of applause for Mr. Kaushik and all my panelists here. We are missing Shalabh Tandon. Had he been there, this would have completed the whole thing, because we have small and medium enterprises, we have government, multilateral development funds looking at it, and then Shalabh Tandon would have talked about financing in private sector. We had another member also, which was in finance. So we will be missing him also. Now, my question, can I start with Mr. Kaushik? My question is, ADB has been involved in structured financing, into concessional financing. From your perspective, what are the most effective ways to deploy concessional capital to unlock private capital in developing economies?
Thank you so much, and I hope you can hear me. It's a pleasure, first of all, for me to attend this, and sorry I'm online and not in person. I see some friends on the panel, so hello to everyone. Let me talk about certain examples of the work that we are doing through ADB that will illustrate my response better. So, to attract private investment, co-investors who are either banks or sovereign wealth funds or pension funds or other multilaterals, our thinking has been to have an anchoring facility, which is a sovereign-owned anchoring facility. Let's say a DFI like SIDBI or an IIFCL or NABARD or something like that. So very recently, we actually approved a program to lend $500 million to the India Infrastructure Finance Company, IIFCL, and there we established a facility for financing sustainable growth in infrastructure. It's basically green and sustainable ESG type infrastructure, where ADB puts in some money, IFCL as the sovereign owned DFI acts as an anchor, and then other investors could join in, whether at the developer and the sub-project level or at the facility level. And there, we are also trying to bring in some concessional finance by blending the ADB money with cheaper funds. We have been talking to the Korea Exim Bank, that is EDCF in Korea. We are talking to GCF. The hope is that with this concessional finance, the overall cost of borrowing from ADB for IFCL would come down. And this in turn will give private investors, co-investors, not only the comfort that one, there is an anchoring sovereign institution, second, there is a multilateral, and third, there is a concessional financing facility. Therefore, all risk mitigation aspects are taken care of. And just one more point on, we are also in the process of setting up, and Mr. R.K. Singh would know this very well because SIDBI is an accredited agency of GCF Korea. ADB is in the process of setting up a $200 million trust fund where we'll have GCF concessional funds available for seeding into different projects in India. And these could be some other DFIs, for example, a NABARD or maybe a NABFID. Through them, we will have projects in which it will be ADB money blended with concessional finance, which makes not only the borrowing cost cheaper, also long tenor, but also the fact that there is a presence of a sovereign-owned body, and then there is an, the multilaterals. Laurent, my friend from World Bank, is there. So, we are all now collaborating, and more, even the MDBs are trying to work together to give the comfort and to attract concessional funds and private investors. Thank you. I'll stop there.
Yeah, thank you, sir. On this, I have very, in 2010, sir, we got a fund from JICA. That was a very concessional loan from JICA. And JICA wanted that should be targeted to specific projects so that JICA name is, so that JICA is there and they say that these projects are funded by them at concessional loan. So the problem with us was, and we had not heard the word blended finance at that time, way back in 2010. So the problem with us was, how do we select the projects? Because all projects, how do we select the projects? And then they were pressing, and I discussed with Director of Finance. He said, we can't keep a separate account for these projects. I mean, for those who are financing green projects and brown project, gray projects is fine, but we were only doing green projects. So the other point was that then somebody will complain that you are doing a concessional finance to them, our project is similar. So I said, this will be again a CAG question for us, that why are you favoring some and not favoring? So then we started blending, and all the lines of credit that we got, we in fact got lines of credit from ADB, World Bank, JICA, European Investment Bank, and AFD as well. And we blended everything, and then that was a concessional financing that we were doing. So thank you for this. And my next question is to Mr. Gonnet. Sir, you have worked with reforms in a number of countries on banking reforms. Given your experience in financial systems, reforms and development, what lessons from other emerging markets can India draw upon to build a robust de-risking ecosystem, particularly when it comes to regulatory segment and credit growth?
Thank you, and thank you for the invitation. I'm not sure that India can learn from the other countries. I think it's the way around. Frankly speaking, this is here where everything happens, more or less. We have very little experience that we can bring from other BRICS economy. In terms of regulation, and if we talk about de-risking, I would say there are in the family, there are two sorts of de-risking mechanisms. There are mechanisms which imply the public money, and there are mechanisms without public money, which are long-term reforms. Let me start with the ones that require public money. And in India, again, you have several of these instruments. I will start with the first one, which is the partial credit guarantee scheme. In many countries, we advocate for these PCGs, partial credit guarantee schemes, because they are basically the number one tool, mechanism to de-risk credit, and in particular for MSMEs. It works across the board, and of course including green finance, but not only. The second is the credit enhancement. And here we have some good news. The central bank has recently relaxed the credit enhancement guidelines. It makes easier for companies like DFIs and other banks to provide credit enhancement. And I was listening to the conversation before on capital market. It has great potential to unlock capital markets, so meaning long-term finance toward the green projects. And another instrument that is not so much used in India, although the regulation allows it, is what I call the public-private, so hybrid format, VCPE, venture capital private equity, whereby the public sector takes more risks than the private LP. This is something that we try to push in many countries. We started with China and some other countries in Central Europe, and we're now trying to promote this instrument in India. It has great potential, especially for startups and firms needing equity. What's missing also is blended finance capacity. Clearly, everybody talks about blended finance, but not a lot of banks, non-banking financial institutions and DFIs know exactly how to deal with blended finance. Not because the pool of concessional financing is not there. There are. We know that there are out in this world some concessional money, including in India with CSR money. But we don't know exactly how to integrate those concessional funding with the commercial funding. So something like a blended finance academy would make sense for India. The second family of de-risking tools are the more natural tools that we tend to forget, but they are super powerful. And we call them the key element of the credit infrastructure. It works for credit mainly, not for capital market. It's everything about collateral. How easy for a firm is it to mobilize collateral? I'm not talking about the traditional collateral, which is the real estate. It's true in every country, but I'm talking about a multitude of other possible collateral. In India, it works not so great because there is a lack of unified legal framework for collateral. It's not super easy for lenders to register collateral. You have multiple collateral, and it's not digitized. Take example of the real estate. It's everything is manual and not centralized. So a lot of things should happen on the collateral regime. The second is on the credit information system. You know, when we look at India, there is a trend of disintermediation which is happening in India. To simplify, the market is transitioning from the banking sector to the non-banking financial sector, which is an excellent news because it means more long-term finance intermediated by capital market, insurance company, I mean all the traditional institutional investors. So that's good. So this intermediation is actually sound. The problem is that the information now is fragmented on clients, on potential borrowers. And to give you just two examples, credit bureaus do not collect data on assets. They collect data on debt, but not on the payment, not on the assets of firms. On the contrary, and funny fact is that account aggregator has been created to collect this asset-related data, but they don't collect information on the liability side. What I mean by that is that India has created those intermediaries in terms of collecting information on the borrowers, but they don't talk to each other. Account aggregators do not share information with credit bureaus and vice versa. So while disintermediation is cool, is great, unfortunately, asymmetry of information still remains an issue in India. And this is something that the central bank is aware of. I think there is a draft law about the National Financial Information Registry, I think, this NFIR, that has been under discussion for now a couple of years. And I think it will be a great digital public infrastructure if this law is enacted. And the last point is insolvency. Insolvency doesn't work great in India. We know that from a fact, from all the banks complaining about lengthy process with the tribunals. It takes between 3 and 4 years to settle a complaint between a borrower and the lender. So that's too much, and this is part of the de-risking. If you want to de-risk the credit market, you have to improve insolvency regime. The last point, sorry I've taken too much time maybe, but I wanted to mention it. The central bank just issued recently a draft revised guidelines on co-lending. And this is the form of de-risking between banks and non-banking financial institutions. That will expand the market considerably outside the priority sector lending. I remind everyone that the co-lending regime was created for PSL. It worked very well, thanks to the central bank and the different features that are attached to the PSL. And now the question is how to expand it to the rest of the credit universe, and this is what the central bank is planning to do. So that will be a great tool for de-risking. Let me stop here.
Thank you. Some very, very interesting, relevant points. What caught me was that public sector and the government banks taking more risk than the private investor, and that way, yes, you will be able to attract more investment. Insolvency has to be faster. Definitely, it will ease lending to the projects. And you also talked about collateral and digitization of it. I agree with you because that is the issue, because whatever collaterals we take, we can't monetize them if the loan goes non-performing, and we have to do that. So thank you so much. And then we come to R.K. Singh Saab. SIDBI, sir, has formed number of verticals for financing green energy. How do you scale up financing in, say, battery storage, off-grid sector, and the one is you have, the third one was bioenergy. So which are bioenergy is emerging sector where financing is required, and maybe for smaller companies, they require quick financing. Because large projects, of course, larger NBFCs would be doing, but in bioenergy, the risks are more. In decentralized energy also, the risks are more. I understand in EVs, of course, a number of banks and FIs are financing. It is much easier. So your views on this?
So thank you. We don't have many verticals within the green vertical. It is like we have 5 missions which are quite focused.
I agree. Missions.
And the idea is that if we do it in a focused way, we can put a team of experts to have, it's like targeted attention. And that is what we went through this process. First was we categorized that how do you shift green tagged loans to green loans, and green loans to green MSME, and green MSME to green clusters. So that is one transition pathway we laid in our approach. Second was pick up energy efficiency, which we have been doing since 2005-06, and you are right, it is quite matured. Then work on the renewable energy side, where we have been working on solar and also wind part. We started very small on the renewable energy. We decided that we should put 1,000 solar rooftop on 1,000 MSMEs. But we really picked it fast, and today we have been, we are running a mission, Har Udyami ki Chhat Par Solar. So can we do that is what we are working on. And in that process, we have moved to wind energy also. Then mission EV. EV is building the EV ecosystem. We met 1,000 stakeholders. And when we say EV, we are not funding only EV vehicles. It is we are looking at the ecosystem. Then comes circular economy. So we are working on right from CBG to waste management and other things. And last is, which we have picked up as an agenda, is adaptation. And there, the agri-allied sectors, the health, the disaster responsiveness, the startups working in this field, we would be working on this. Now, to do all this, because these are all emerging, except energy efficiency and solar, if we leave, other things are all emerging. They carry a lot of risk perceptions, and they require risk mitigant approach. So what we have been doing is we build the capacity of the value chain, train the bankers. We also work on building capacity of the aspirants who are looking for moving to this, which is a very difficult thing, to move to a green side. And besides that, we have been also adopting a bottom-up approach. It is not that small and medium only we are targeting. We are even going below micro to a livelihood level. The idea is that while we may not say this is green or not green, we should enable them to go green. And this is what we work with artisans. We call it Project Grit, which is green inclusivity. We work with artisanal pockets and clusters and try to shift them to the green investments. One example is Moradabad, where we did from coal-fired to gas-fired. Similarly, we are working in other segments also. Then we have, we have set up a few platforms with the help of multilaterals and bilaterals. This is called GIFTS platform, Green Indian Financial System. We have also got a GROW platform, which is for financing, green financing for women. The fourth aspect is we have risk mitigant model. We operate risk sharing facility so that the bankers who are taking up these projects in unknown, emerging, not yet established models, we should be supporting that. So we operate a RSF risk sharing facility for EV. We have been operating for last 12 years in energy efficiency. We have set up one in municipal solid waste, and one we are in process to set up for nanopreneurs. Nanopreneurs are some segment which we are saying they are looking at shifting from livelihood to micro enterprise. Now, talking green on that level becomes crucial. And now, once you kindle this appetite, you need finance instrument being there. So we have made it very simple. There are only two schemes which we operate. One is 4E, which is end-to-end energy efficiency. So it is, we have identified 890 technologies which are clean, green, energy efficient. It is list-based financing, total digital, and anybody can pick up, he may not know also it is green, it tells them it is green. So it moves them in a digital green journey. So there we have an edge because everybody moves in a SOP format. We have a digital tools also which helps the officer to appraise and move into that. Then there is a green finance scheme. Anybody, any aspirant coming in, we will fit them into this scheme. Why anybody should recall schemes? And last one is, because only 1 minute 42 seconds are there. The last is we have got gift and spice scheme, which we operate under guidance of Ministry of MSME and supported by World Bank. This is, we are offering for any MSME going for green investments, 2% interest subvention. And if they are going for waste management or circular economy, there is a capital subsidy available. We are going to work the version 2.0 also to scale it up now. It is 25 lenders have come on board after SIDBI tested it and validated the model. So the entire model is, if you have to please the lending value chain, you have to ease the approach. Right, whether aspirant approaching the banker or the banker approaching a green case. They should be enthusiastic enough to pick up a case rather than to be pushed for picking up a case. And so we are trying to create that enabling environment, and that is what is the thing. I always say to our team, this is nothing like rocket science. It is basically conscious call to environment and social aspects. If we take into account these aspects, and plug it with risk mitigant models, I think we are going on this.
Wonderful, sir. Very good. Just one question, sir, small one, for the benefit of the audience. Since you are financing a very difficult area, MSMEs and even smaller entrepreneurs, how is your experience? What is the non-performing level of these loans that you are giving? Because we understand that in solar, we don't find too many non-performing assets, nor in wind, because these have become mature technologies. What we find is in biogas, maybe in ethanol. Ethanol also, I feel, should be okay, but probably in biogas or small hydro. But what has been your experience with respect to the performance of these projects?
Yeah, so you rightly placed the energy efficiency and the renewable energy side. These are quite going good in that term. And but when it comes to EV or CE or adaptation is too new to really think of. EV and CE part, they are yet to move up to that maturity level and start indicating. But yes, that is why I say that when we are operating in EV segment or CE, we are backing it up with risk sharing facility, because that journey of it's quite risky project has to be backed up by this sort of thing. And while presently portfolio seems to be good, but there are 1 or 2 cases which are emerging, which thanks we have risk sharing facility backed up out there.
I think which is excellent, and I think SIDBI is one organization which has given financing to I am a co-founder in a NBFC, small NBFC, where we were not getting finance from banks or NBFCs, but SIDBI was one who gave us last year. So thank you. And the time is up. I must thank all my panelists, and I think they deserve a big round of applause. Though we couldn't we couldn't have 2 rounds, but I think in 1 round as well, they have done a good job. Thank you very much. Thank you, sir. Thank you. Thank you to the organizers. Thank you.
Thank you, Babliji. Thank you very much. Now may I request Ms. Neha Khanna if he can come forward and help us in paying the gratitudes. Neha. Mr. K.S. Popley, former chairman IREDA. Sir, thank you very much for anchoring this discussion. We had with us Laurent Gonnet, his lead financial sector specialist, World Bank, and Shri R.K. Singh ji from SIDBI. So the people in fraternity call him the Green Man. Thank you, R.K. Singh ji, thank you. So from the Green Man to Green Bank, can we have a new green